This time we're talking about the fixed income markets, where we have our eyes on the Q1 performance. Q1 is just some few days ago, we left the Q1, now in the second quarter. But we're going to have a review of the Q1 numbers. And let's bring in Ayomide Adeson, a fixed income dealer with FSDH Merchant Bank, to give us details about that and the projections for the second quarter of the year. Thank you for joining us, Ayomide.
Yeah, hi, Anita. Good afternoon.
Yeah, okay, so welcome back from that holiday that you had. Okay, so now, my first question, I want to ask the targets that was set up by the Debt Management Office as well as the Central Bank for the bond and the NTB issuance, was it met within the first quarter?
Oh, yes, it was definitely met. In fact, I think it surpassed it. For the bonds, we had about 1.2 trillion on offer, and 1.93 trillion was allotted. And in the NTB space, we had about 5.11 trillion on offer, and 5.53 trillion was sold at the auction. Even in the almost space as well, we saw the same thing. There was about 2.3 trillion on offer for 4.57 trillion is sold. So yeah, they basically oversold in the first quarter.
Okay, so now my second question, it's always the yield environment that investors look at in terms of investment within the fixed income space. But what were the key drivers behind this, the yield environment? We know CBN policy affects it, inflation, investor, what were the factors?
Well, in Q1, I think there are three major factors that affected yields. We saw the inflation figures. So, there was the rebasing that was done. Then we also had some activities from the DMO. And then there was the MPC meeting that was held in February, right? So on the rebasing, we saw January inflation figure print at 24.48% from 34.80 in December. That was over 100 basis point drop. So, of course, that median yields go lower. At the MPC meeting as well, all parameters were held, including the asymmetric corridor. So I think that sort of had an effect in markets as well. So, that was the first time that they were holding. We had seen them hike, progressively last year. So, for the first time, they decided to hold. So yes, markets also interpreted that as, an indication for yields to go lower. The DMO also did some changes to the calendar. So on the bond calendar, we had a new issue, the 2035 bond, which with a coupon of 22.6%. They sold that in the January auction. It was meant to come on February as well, but they took it off the calendar. And then we saw a short squeeze in the market. So yeah, that also, drove markets significantly lower, about 100 to 150 basis points. And then in the NTB space, we saw them, bring a supplementary auction. So there was an auction that was not even on the calendar at all for Q1 in NTB. And they had brought that, and we started to see rates move back up a bit. So yeah, it's been mixed signals from the DMO. But what we saw most of Q1 was, yields going lower, and with inflation sprinting lower, we just saw investors coming in to buy, and we saw this play out significantly at the February auction. The DMO was able to basically oversell about 900 billion as against the 300 billion that they had on offer. So yeah.
Okay, all right. So now this is going to be a two-pronged approach question, my friend, which is I'm starting with this is the first trading day for April as well as the start for the second quarter. Are you anticipating any change in market regulation that could influence the trading activities? And then, what's your outlook for the second quarter?
I think the major thing that we have coming up is the MPC meeting in May. I believe that between now and then we should have about 2 inflation figures printed, and I feel that would greatly influence the decision of the committee. But there's also the global side. The market is basically waiting for Trump's announcements today on a method to his tariffs, right? But regardless, as long as these tariffs are going to hold, I believe that market is going to translate that as we're going to see a lot of inflationary pressure, right? And with that, it might just mean that the Feds might, be, they might not be, so willing to cut rates, right? And if we're going to see that on a global level, I think that might also influence our own decisions as well. On a macro level, right? So I believe that those are some factors that the committee will put into consideration. If we're going to be seeing global inflation, I don't see them being very keen on cutting rates, which is what market is expecting. I believe that we might just see them hold again, right? But of course, that contradicts what I expect on our own inflation rates, right? I expect that our own inflation rates should taper down with the rebasing, right? So yeah, I guess it's something that would see would have more clarity by the May MPC meeting, right? But for the bond space, I do expect that we might see some new issues. This is because the shelf life for the securities on offer it's already above 2 trillion. So I mean, before December, right? Shelf life on most securities used to be about 1.7 trillion. But the 2029s and the 2033s, which are on offer right now on the calendar, the 2029 has already talked about 2.23 trillion on in circulation. The 33s as well. We have about 2.09 trillion in circulation, right? So I believe that the maximum we would see in circulation will be about 2.5 trillion. So they might just replace those with maybe the 2030 or 2032. Reason being, it seems focus has been at the mid end of the curve. So if you look at it on the 2030, we only have about 500 billion in circulation. So I really, if I just bring a new 2030 security being 5 years, and then maybe a 2032 being 7 years. I think that's my outlook for Q2.
I'm sure investors are really eyeing out for your projection for the second quarter and knowing how to make their position within the fixed income market. Thank you so much for your view on our show.
Thank you, Annette.